Good Friday morning, good Friday afternoon, everybody. Kip Harrods here with your midday VRA investing update. Hope you're all having a good morning so far. Big day up again here. The lows are in place. We've been talking about this week. We've seen all the signs, the internals. We'll go over some of this morning because I think some important things that really every investor should be aware of. Right now, Dow Jones at the highs of the day up 350. But again, the story is NASDAQ. NASDAQ up right now 300 points. That's 2.5%. But semis are even better. Semis up better than 3%. Semis lead Nasdaq. Nasdaq leads the broad market. That's textbook. That's textbook bullish right there. And the VIX is now finally getting hit down to just broke 26. 10-year now down to a 2.7%. All the things we were looking for, kind of hoping for, all falling into place here. And again, I think it's pretty clear that the lows are in place. Look. This has been a brutal 4 years. No one's really talking about this that I hear, and I don't watch much TV, frankly, but I hear nobody writing about this, writing or talking about it. We just had our third bear market in 4 years. That's unprecedented. That is unprecedented. Okay, when's it happened before? It's never happened before. 2018, fourth quarter 2018, average stock fell almost 50%. Okay, brutal fourth quarter. The Christmas from hell. Remember we had the Fed raised rates 8 straight times that year. Get Trump, right? They even raised rates right before Christmas. The market imploded. There was nobody there to buy the markets. They crashed the markets on Christmas Eve. Okay, we had a crash on Christmas Eve. Average stock down almost 50%. Bear market. 2020, Rona, right? Coronavirus insanity. 5 weeks, 37% loss, right? Bear market in 5 weeks, brutal. That's number 2. And number 3 just happened. Now you might say, well, Kit, S&P 500, we didn't have an official bear market. I don't care. That's the label I don't care about. The average stock, again, fell more than 50%. That's 3 bear markets in 4 years where the average stock fell 50% or more. Okay? That's a bear market on steroids. This is like, again, unprecedented. So when you think about it, and you think about it in the context of these sentiment surveys that have, investors just scared out of their gourds, right? Extreme fear on every survey you see. It's easy to understand why people are afraid. We've had 3 bear markets in 4 years. I don't blame anyone for not wanting to be in this market. I've said it for a long time. I fault no one for wanting to have nothing to do with the stock market. But if you're a nimble investor, right? If you, fortune favors the bold, right? People that bought in the December of 2018 when the Fear and Greed Index hit 2, people that bought then doubled their money in short order. People that bought in coronavirus insanity when the Fear and Greed Index again hit 2, doubled their money in short order. And now the Fear and Greed Index, 2 weeks ago, hit 6. Average stock fell better than 50%, right? A bear market that lasted over a year for most stocks. I think it's going to be the same result. I think we have some data to back that up. Let's talk about that real quick because we covered it yesterday briefly. This is the 4th worst start to the year in the history of the S&P 500. That's the bad news. The good news is in those previous worst 4 starts of the year, the market has screamed higher. Over the rest of the year, the market's been higher 100% of the time, and the average gain has been better than 19%. So we have data, some really good analytics. That's some of the best you're going to see on our side. But there's more than that. Tyler covered this yesterday on our podcast. Well, another survey we follow closely is the AAI Investor Sentiment Survey, and I've voted in it since like 1990, and it just broke 20, and that's only happened 10 times. It's at 19% bulls right now. Okay, it's pretty rare air. What's happened after that is also very interesting. Over the next 6 to 12 months, the market's higher again 100% of the time. All 10 cases, the market's higher 100% of the time. The average gain over the next 6 months is 13%. The average gain over the next 12 months is 23%. So again, the data, the analytics tells us this is the time that a smart money investor is buying. And there's a lot more I could cover with you, but again, they all really point to the same thing. I'm going to touch on what we've been talking about here because it's held up. 2 weeks ago, we started talking about Cathie Wood's Innovation Fund. Fell 77% in 15 months. I told you then that was the tell. I think it bottomed at 77% down. I said that's the tell then. Since then, in 2 weeks, it's up another 4 or 5% today. Cathie Wood's Innovation Fund, ARK, ARKK, is now up 20, 25% in 2 weeks, right? All right, been brutalized, okay? Brutal bear market again. And one of the smartest money managers out there that really led everybody for years with her returns. What's interesting about that is during the dot bomb, right, 2001 blow up of NASDAQ and .com stocks, the NASDAQ fell 77%. So we have history repeating exactly here. If Kathy Wood's fund today is like, the .com equivalent, right, that we saw from 2000. So with innovation stocks now, that's very interesting, I think. Also, NVIDIA. This is an incredible story. NVIDIA, a $10,000 investment in NVIDIA turned into $500-something in 5 years, from 2016 to last year. It topped in November of last year, and now it's been destroyed. As of yesterday, when they announced earnings the day before, after the close, the stock fell 56% from November to 2 days ago, really a day ago. In the last day, the stock is now up 25% from the lows, 152 to 185, I think I saw today. Had an outside reversal day. That's a bullish technical event. And so that's a market leader. That's the leader of the chip space, NVIDIA. And it's had a key reversal, right? ARC having a key reversal. And then we also just had back-to-back upside volume days in NYSE of better than 80%. Yesterday was 87% upside volume day. That is a technical buy signal. So this market's got a green light. And again, I think fortune favors the bold here. And I think that smart money investors buying now are going to be very glad they did by year end. And I think we've got a market now that's climbing a wall of worry. A bull market that's climbing a wall of worry, which is what they tend to do, right? Share buybacks are coming back with a vengeance. We'll come up on a new month, right? We'll come back to, again, we're off on Monday. This will be our last midday update with you until then, until Tuesday. Markets closed on Monday. But we come back and we've got a new month. We got fund flows coming in. We've also got the Fed, of course, has been signaling, again, they're going to be more flexible, right? So we're going to have more rate hikes, but not much more, folks. This economy is really slowing down. So I think that whole Fed story of jacking rates, 20, 30, 40 times this year, I think that's not going to happen. And the fears of that are gone. And we're seeing the same thing with ECB, by the way. Europe is going into recession. So they're changing their story again. So the whole concern about us going from quantitative easing and quantitative tightening and a lot of rate hikes, that's beginning to moderate. But what's interesting is here's the market that already fell, right, 20, 30% plus in all these indexes, okay? Again, individual stocks down more than 50%. But if we're not going to have a recession, why did they fall that much? That's what presents the buying opportunity. All right, I think that's it for now. The Biden bear market has been brutal. Again, we've had 3 and 4 years, unprecedented. It's not going to be straight up. They never are. There'll be some fears. We might have. I don't think we're going to have a retest at this point, but you never know. We're going to be nimble. We were aggressively buying here over the last couple of weeks. We are going to be we took some profits today, as a matter of fact, in our options positions. So we're going to be very nimble, but we're looking to be a buyer from this point forward. And I think the rest of this year is going to be good. The markets, I think, are starting to discount the midterms, which are only just over 5 months away now. And you'll have gridlock in D.C., which the markets love more than anything else. Again, wall of worry is being climbed. But we think the lows are clearly in place. And this is a buyer's market right now. All right. All right, folks. Always appreciate you watching. Hope you have a great long weekend. We will be back today for our podcast at the market close. Join us in. Otherwise, we'll see you back here Tuesday morning with our midday update then. Have a great long Memorial Day weekend, everybody. Thanks again for watching. Bye-bye.